Harvest is off to a slow start. Already growers are wondering just what they're going to be able to get for the crops that are going into on-farm storage. Fortunately, I think there's some prospects for at least higher prices, particularly if soybeans can lift corn along for the ride. Now, one factor that may come into play is the La Nina cooling of the equatorial Pacific. It can cause weather issues, a lot of different weather patterns around the world, both in the winter and summer in the northern hemisphere. I went back and actually took a look at how yields fared around the world during these previous La Nina episodes. It can hurt wheat yields in Canada. Of course, it can affect U.S. corn and soybean yields. We've seen that happen, 1998, 2012. But it can help wheat yields by producing a lot of moisture on the plains. That's certainly a trend that seems to be underway. It can hurt Argentina's coarse grain and soybean yields. Again, they had issues this summer already with too much moisture, and for a time at least, it looked like it might be turning too dry in that country as well. Now, Australia tends to benefit during La Nina years. They get more moisture to help their wheat and feed grain crops, and that certainly seems to be happening this year. They've been getting record rains, and the only concern is whether rain might spoil that crop ahead of harvest, perhaps making it more feed grain. That would just, of course, compete with corn. It can also hurt feed grain yields in the former Soviet Union, and wheat yields in Europe as well. We're seeing a fairly dry fall develop in Europe, which is starting to raise concerns over there. Now, the trouble with all this is a few months ago it looked like the odds of a La Nina developing were fairly good, but the latest forecast from the government dropped that to less than 50%. So there's at least some chance that this hoped-for La Nina will never develop. Now, forecasters around the world disagree. The Japanese Weather Service sees a 70% chance of a La Nina this fall. So it's something that we're going to have to watch because the experts don't agree. This is the nearby chart of corn futures. You can see we held that $3 base about as low as we've gotten over the past decade into September delivery. We have been able to bounce up a little bit since then, and the question is now, where are corn prices headed? Before you do anything with your 2016 corn crop, take a look at where you are. Now, most growers sold some of their crop this summer on our rally. If you followed the recommendations I put out on Farm Futures Daily, you priced around 40% of your production at an average of 447. With those big yields, 175 bushels per acre, toss in an ARC payment, and it looks like you may have a profit. So before you just shut those bin doors tight and think you have to have another rally like we had this year, you may be pleasantly surprised, and that means then you can become a more aggressive seller if we do see some futures and basis rally. Now, overall, again, I'm not optimistic about corn prices, even if we drop yields to that 168 level. It only raises prices maybe 15-20 cents from the 320 estimate put out by USDA. We've already reached our price objectives for rallies, and it may be difficult to really get things going, again, unless we get a rally in soybeans. The seasonal trend for December futures in years of normal production, that's the red line, tends to just grind lower into December delivery. So short-term bounces do not typically happen this time of year. A thing, of course, we have to worry about is just where are we going to put this crop. If it's as big as USDA projects, it could fill up almost 100% of the available storage capacity in the United States. Now, that's going to vary from region to region. In Iowa, Nebraska, in many areas, you're going to be seeing the crop bigger than storage capacity. Now the good news is that many areas are able to deal with this. Elevators and farmers have become much more adept at handling big crops, and some of this corn is never going to see a storage bin. It's being loaded on trains, barges, and trucks and rail cars, and it's moving to end users who want it. So that'll also tend to alleviate this. But basically, if you had storage problems last year in many of these states, you'll probably have them again this year. Basis is weaker than average, and that's something we're going to have to watch now as to just how weak this basis gets. The slow pace of harvest is keeping the cash market from breaking too much, so that's a positive sign. But along the river system, we're seeing the basis break pretty sharply despite the strong pace of export sales. So again, that's a concern that the market, particularly in Illinois, where yields are very good, thinks it's going to have plenty of corn available. Now, one of the factors we're watching in terms of strategy is the carry in the futures market from December to July. It got out to about 26 cents. It traded as narrow as 23 recently. And what this means is there's just not a big spread between December and July futures that carry. A few years ago, if we would have had a huge crop like this one, we'd have carry out 45 to 50 cents. But then farmers built a lot of storage. And so there's less need for an incentive in the futures market, at least, to get that grain tucked away in storage. The basis seems to be doing that. Now, in terms of a flat price rally, we may get a little bit of a bump typically into the end of harvest. Again, as that crop gets tucked away, end users may have to bid up prices a little bit, but the long-term trend, that's that red line for July futures in years of normal production, shows prices grinding lower into the end of winter, stabilizing a little bit, and then unless we get some sort of bullish weather news, just grinding lower into summer delivery. So that's something you have to watch if you're just thinking of throwing the crop in the bin. Last year we got a rally, doesn't mean we have to get one this year. The combination of weak basis and carry typically used to lead to good profits from storage hedges. That was always my conservative go-to strategy. However, in some years, the past few years, with less carry, it's made that storage hedge more risky. This is chart is basis Omaha, and you actually lost money on your storage hedge last year, 28 cents a bushel, if you held the corn long term like we used to recommend. Now what happened, of course, was there was less carry and there was strong, fairly strong harvest basis, and that basis strengthened because the crop got tucked away so quickly. The crop was fairly small, remember, 13.6 billion bushels. And when we had the rally on the board, farmers unloaded, the basis weakened, and so anybody with hedges, those hedges weren't as effective as they might have been previously. Now overall, storing cash corn is profitable. That's why farmers do it. But it's important to remember that you have basically 50-50 odds of success storing corn long term. Sometimes it pays off like last year, other times it doesn't. Now for soybeans, if you remember, at the end of March, everyone was bullish, talking about the end of the world, $7 soybeans, and what happened? We rallied $3.50 on the nearby contract. We backed off since then, but it's an indication that it's really never a good idea to get too bullish or too bearish on soybeans. A lot can happen in a hurry. Now growers, in our survey, we found we're much more aggressive sellers of soybean than corn. I recommended being 30% sold with a combination of HTAs and puts. If growers who followed our recommendations had big yields, are probably looking at a profit if they use fairly conservative storage strategies and don't hold out for a big rally. But even then, I think you're probably looking at good odds of a profit. So again, let's take a look at those soybeans profits as they stand right now to see where you're at. The potential for rallies, I think, is probably pretty good. Now, USDA forecasting just $9.05 average cash price for the crops. If you take a look at the way my numbers start to crank out, you see even with the big yields, if demand is good, we could see $10.50 cash soybeans. So a lot of potential, I think, for prices to go up. Now, of course, we're having a rally, so that's eroded some of that potential. And that's why it's so important that if you can sell for a profit, you go ahead and do it. The November futures trend, as with corn, we tend not to see big rallies into the delivery of November futures, make our lows early October, then maybe a little strength. The July futures contract, again, tends to get a little bit of a post-harvest bounce and then sells off into winter. That's not only are farmers selling for cash flow, but that's also into the teeth of the South American harvest. When we rally, we tend not to get back to those fall highs. Long-term storage may not be in the cards this year. The basis is, this is along the Illinois River where deliveries focus, futures still above option. So we're seeing some strong basis due to the good exports, even though started to back off a little bit as new crop begins to hit the pipeline. North Central Iowa basis below average, not as weak as it's gotten some years at harvest. We'll have to watch this. Again, the weaker the basis, the more storage makes sense. But if you can get a good basis, you can sometimes make just as much money on the board selling with a basis contract or selling cash and buying futures as you can by just throwing those soybeans in the bin. Now, storage, it tends to make sense. In fact, Basis Omaha has earned a return long-term storage all 15 out of the last 15 years. So it tends to be a good idea. This year, however, I think you may be better off, particularly if you need to make room for corn, maybe getting rid of some of those beans if the basis is good, and transferring ownership onto paper. The other thing we have to start thinking about is ARC payments. Producers will be getting payments, if any, in October from their 2015 crops. Looks like the corn payments will be similar to what we saw for 2014. Some growers got very good payments, other growers didn't get anything. That same inconsistent pattern will probably be present for 2015. It's just the way that program works. Now for soybeans, most growers probably won't get very much, if anything. A lot of counties look like they're going to get zero. The corn payments haven't changed from my estimate in February that I put out. It's because the average cash price for the crop estimated by USDA is the same. The average cash price for 2015 soybeans actually went up 15 cents, so that resulted in a small decrease in potential payments. I also took a look at what we might expect for 2016 using county estimates from our vegetation yield maps. This kind of showed a similar pattern to what we saw this year. Again, some counties going to be seeing good ARC payments, other counties nothing at all. I think it's important to start taking a look at yields in your area, getting a feel for what you might get from that ARC program. You can't spend it before you get it, and you won't get it for another year. But it can help you, I think, balance out the tendency to just throw your crop in the bin, thinking that you need a big rally. For soybeans, USDA estimating the average cash price $9.05. Once again, doesn't look like a lot of areas will get payments. A little bit more difficult to estimate these ARC payments. Yield model wasn't as good on a county basis. We didn't have statistically significant results for some counties, so we didn't put those out. Now you can go online and check out results from your area, ffcharts.com/corn and if you click on those dots, it'll pull up a list of what you might expect, what we're estimating your yield at, how that compares to the ARC yield, and your potential ARC payment. For soybeans, it's ffcharts.com/soybean ARC. So these interactive maps, in many cases, can help you get a feel for what you might expect. So next, I'm going to talk about the outlook for 2017.